All right, so you're probably wondering what's down payment assistance, okay? There's many forms and we specialize in a few of them, okay? The main ones that we use are the CalHFA program, Platinum program, and the Chenoa program. Those are the three main ones that we use. Now, some of the fundamental differences about the down payment assistance is really based on, do you have to pay it back or not, okay? CalHFA, those loans are great because they allow you to finance the entire purchase. They give you a base loan for your first, which is standard. They give you a second loan, which covers the down payment, and they allow you to finance a third to help cover with the closing costs. Typically, when borrowers are getting those type of loans, they're bringing in about $2,500 to $3,000 in that range to basically close out their transaction, right? And even some of that could be negotiated because it's more of the closing cost side. With the Platinum and the Chenoa loans, they just do a first and a second. And with the Platinum, as long as you make payments for 3 years on time and you don't move or you don't sell the property, they'll forgive you of that debt, which is a huge benefit because that loan turns into equity, which is great. With the Chenoa, depending on your income, they have a forgivable option and they have a non-forgivable option for those who make more money. And to get into the details of that, we'd have to look at your specific situation to let you know what you qualify for, but that's basically how it breaks down. So here are some key things to remember with the down payment assistance programs. You're not gonna qualify for as much as you would if you're using a standard loan. The reason being is because there is basically a 100% loan being done here, the banks limit the amount of allowable debt to income ratio that we can use to qualify you. So to give you an example, a standard FHA loan, we can use a debt to income ratio of 56%, which means for every dollar you make, we can have 56 cents of that going towards all of your debts, plus the mortgage that you're looking to get and qualify for. With the down payment assistance programs, all of them across the board, they cap at a 45% debt to income ratio, which just means you're gonna qualify essentially for about 11% less than you would on a standard loan. Another thing to keep in mind with these down payment assistance loans is that the rates are typically higher than it would be for a standard loan. At this point that we're shooting this, the rates are typically 0.5% to a whole percent higher than your standard loan. And this is across the board. It has nothing to do with your credit. You could have a perfect credit score or a very low credit score, and you'd get the same exact rate. It's a program rate dictated by the ones that actually host these programs. It does come with a higher interest rate, but again, the out-of-pocket is significantly less. Now, another thing to keep in mind with these down payment assistance loans is the closing costs. They're higher than standard loans. And a lot of it has to do with the program for the bank that we're going to that facilitates these programs. So they charge more for these loans. And because of that, you either have to come in with that money yourself, finance it on one of the loan programs, or ask for a credit from the seller. But again, that down payment is being financed. So the numbers work out to you bringing in less money. So in a nutshell here, down payment assistance programs, they're great, okay? Especially for first-time home buyers, and if you don't have all of the money to make the purchase, it could be a great option for you and your family to acquire your first home. But keep in mind, there's a few things that you're gonna see that are gonna be different than a standard loan. One, the rates are higher. Two, the closing costs are higher. And three, you're gonna qualify for less than you would on a standard loan. But these are great loans. We are doing them for our clients every single month. And if it makes sense for you when we run the numbers, then I strongly suggest you take one of those options. So again, what is down payment assistance? Down payment assistance is a way for you to finance the entire purchase. Some of the benefits is that depending on your income, you may or may not have to pay that money back. Now, again, to get into the details and how that applies to you, let's have a conversation. Again, thank you for watching this video. If you have any questions, please give me a call or one of my assistants, Travis or Rob, and we look forward to helping you in your home journey. Thank you.